Welcome to third episode. In this episode, we will learn internal range liquidity and external range liquidity, market structure shift, order blocks and sessions. Are you still unprofitable in your trading journey or you are just starting out? I am here to guide you. I am offering a comprehensive mentorship program that covers everything from the basics to advanced. This is more than just a course. If you want to achieve consistent results, you can contact me via email, Facebook or WhatsApp. All the details are in the description below. So market moves from external range liquidity to internal range liquidity. In the last two episodes, I already have taught you about buy side and sell side liquidity. That is our external range liquidity, and fair value gaps are internal range liquidity. See, this is a fair value gap. What the market did, market goes above this high, taking the external range liquidity, and it moved down to this internal range liquidity, drop down into this fair value gap before moving up. Some text so that you can understand well. See, the market moved down into this internal range liquidity before going up, but it has not took yet this external range liquidity. But it also depends on the news events, on the economic conditions of the world, what is happening in the world. So now you have understood about external range and internal range liquidity. This is weekly chart, and now we drop down to daily chart. Opposite color candle before an expansion, that is our order block. This is our order block. This is our daily order block. The market dropped down into this 50% of order block is called mean threshold. Market drop down into this order block before going up. So this is an order block. All these concepts work on any time frame, any one time frame. You can have a model like you only take trade from an order block, from a fair value gap. You are using external or internal range liquidity. Don't complex the things. Make it simple. Now we will talk a little bit about market structure shift. We have dropped down to 1 hour now to understand market structure shift. See here, there is a strong market structure shift. Whenever the market close below the buy side or sell side liquidity impulsively, there we can expect, but that you should know drop down analysis before using this concept. Like it has dropped down here and it moved up again. It has moved up, but it also has closed above this buy side liquidity. But it is not market structure shift, because this is our range 0.62 to 0.79 level. That is our optimal trade entry level, and the market moved up, and from there we can expect an bearish entry. And again you can see the market here also moved down, but not took this sell side liquidity. Instead it moved up to this low resistance liquidity runs and balanced it before moving down. Now let me mark sessions for you. I moved down to 15-minute time frame so that you can understand session. I have took any random day to help you understand sessions. This is Asian kill zone. This is from 8 p.m. to 12 p.m. of New York local time. Your time must be UTC -4. And London session is from 2 a.m. to 5 a.m. and New York kill zone is from 7 a.m. to 10 a.m. It depends on your pair, in which session it has volatility and in which session you want to trade according to your time schedule or anything. See you in the next episode.